Peter McGuire is the CEO of XM Australia. Peter, good to see you this morning. Look, the question is whether this is game theory at play from the White House or who's under more pressure. BI, Bloomberg Intelligence, have done the numbers. If we go to another 25% on the tariffs, that's going to be nearly 1% knocked off Chinese growth. If we go to tariffs on everything, it's 1.5%. Do you think it's game theory or real pressure?
Well, good morning, Manus. I tell you what, it certainly had some impact to the market over the Sydney trading day. It's down the best part of, numbers of percents as far as China and Hong Kong. Have a look what the Aussie's doing as well, our dollar. So I think there's a degree of sincerity from the president's behalf. It'll be interesting to see if the Chinese actually do arrive in Washington on Wednesday, and that's not far away, considering we're well and truly halfway through Monday business day. So I would say that at the present, you would have to back the president and see if China retaliates or if they even turn up for Washington.
Let's flesh that out in a bit more detail, because the reality is, even though this might be a negotiating tactic, the U.S. might not have as much leverage as a lot of people like to think. A graphic tells the story very powerfully, and that is the furniture export situation. Because even if you were to try and find replacements for imports from China when it comes to furniture, it pretty much makes up the rest of whatever is left in the global pie. It's not easy to replace those supply chains, components in the long list of suppliers. How is the U.S. going to tread here without necessarily affecting the story back home?
Well, that's a wonderful, that's an example, Yousef, and there's no doubting that, and you probably run that across to some of those technologies also. I don't know how it moves forward, but the president's got one agenda, and that is to get a deal done, and there's no backing back. He feels as though it's been too slow in getting to the finish line. It's been dragging on for months. And in typical Trump style, he comes out on a Sunday, hits it up on tweet and says, right, this is going to be the game on. This is how we're going to move forward. And these are the new rules of engagement. So whilst we take on board, game theory or being fair value, the other side is you're dealing with a president who wants something done and wants to get an end game. And that really puts him in a different position to, I think, the Chinese mentality. So that's the situation where it is.
Yeah, Peter, what people want to know is actually how to trade around this, position around this. I mean, if there's anything, Yousef and I started the conversation today about this blows a hole in repressed volatility. Is this going to be one of the most spectacular opportunities to sell vol? CBOE volatility futures are up by 15% overnight. Would you be brave enough to sell some vol on this spike?
I tell you what, you've got to be very careful, Manus, because, it dependent upon the instrument you're trading, there's probably further downside yet for some of these markets. It'll be interesting to see how the S&P opens and what happens during its trading day. Traders have got to be mindful where US dollar is, what happens as far as gold, and of course where currencies trade. So, traders are looking at many different angles, and of course where WTI is and in the energy sector. So, I think traders have... retail is a different mindset to maybe the commercial side.
Peter, I appreciate there are many different options on the table, but what are you telling clients, or maybe what positions are you actively pursuing, given the amount of global markets dislocation that is currently underway?
Well, it is a great degree of market dislocation, and traders, they stopped out if they've got, large positions, and have a look what that US dollar's done in the short term. Aussie dollar's very heavily traded, and it's had, quite a substantial sell-off. So traders are looking for the best opportunity, and more importantly, where they're going to see some form of sensibility. And when you've got these actions being presented by the president, that creates turmoil, and it creates that great word, which is volatility and unknown. And that's where traders can change positions very quickly. So, as far as giving guidance, we've got, people all over the world that are actively involved in the markets, and it's hard to put a benchmark where they should be or shouldn't be. They're just, trading on their own behalves and seeing where, price movements are and try to capitalise on those.
Peter, what did you make of the PBOC slipping a small one in? They dropped the reserve requirements for smaller banks. Do you see that as a ballast, as sort of a preparedness, or do you just think it's a sort of silent but deadly move on stimulus?
I think it's a little bit more of a ballast because, quite simply, you've got all of those moving parts at the moment, and I feel as though they've come out to try and form some form of stabilisation. You know, what we saw last week was very much a different week to what we'll see this week. No one was expecting this to take place as far as, you know, from a trade perspective and what impact it's going to have to the PBOC and to, you know, all other central banks. So I think it's just a little bit of an unknown at the present time, and this week could be a very, very volatile week to, you know, capture and really present itself with trading moves.
OK, Peter, thank you so much. Peter McGuire stays with us. A little bit more to get through on the markets.
Peter McGuire, CEO at XM Australia, is still with us from our Sydney studio. Peter, which side of the fence are you on? Is the Fed going to raise rates or cut rates, or are they going to stand par completely?
Well, I tell you what, Yousef, you know, the way the rhetoric is, they're looking at certainly cutting rates, and that seems to be the mantra, you know, that Main Street is absorbing and digesting. Will it happen in 2019? I think the jury's out. It may be there later in the year, though those numbers, as Kudlow says, are just extraordinary. And I don't think anyone was expecting a 263 handle, lowest in 49 years. What's next month's going to produce? So, you know, it just seems to be getting, you know, stronger and stronger as each month rolls on. You know, you take what happened in the last 24 hours out of the market, there's every chance you would have seen the S&P maybe through 3,000 sometime in, you know, in May. So that's where it seems to be, onward and upward at the present time.
The market has just repriced the probability of a rate cut by December to 64%. It was 30% last week. If there is a pause in these trade talks, if there is a deep freeze in these trade talks, Peter, do we accelerate that possibility, probability, as recession speak rises again in the United States of America as a result of trade angst?
I think so, Manus. I think they'd roll it forward, and I feel as though they could be there by September. That's why everything that's happened in the last, you know, 18 hours has really thrown a spanner in the works as far as conventional thinking. What was relevant on Friday isn't relevant on Monday. And that's just, you know, it's just thrown the whole market in some form of, you know, disconnect. If we do see Washington, and if the Chinese do not attend, then I think you're going to be looking at possibly by July or August you'll see rate cuts if Trump stays true to his mantra. And if China does attend, then, as you're saying, you know, it's a 64% chance by, or 65% chance by December. So they seem to be the metrics and everyone's working to at the moment, and it's just a little bit of a wait and see.
Peter, we were looking through the calendar with the rest of the team, and remarkably, we've got a long list of Fed speakers over the coming few days. Let me run you through who exactly is going to be talking. We've got Patrick Harker, Robert Kaplan from the Dallas Fed, Randall Quarles, Leo Brainerd, Bostic, Williams. I mean, it's a very long list of very important people speaking on monetary policy and related issues. Does the Fed have an issue of over-communicating? I mean, this is a very sensitive issue.
Well, it very much is a very sensitive issue, but so is President Trump coming out yesterday and saying what he did as far as trade talks, and maybe this is, you know, it's all playing in together. Who knows in the sense whether it was it certainly wasn't orchestrated. I'm not suggesting that, but they're coming out, they've got rhetoric, and they're going to present to the market what they see is the pathway forward for the Fed, from Pat Harker all the way through. Now, when, you know, this week would have been a very normal trading week. We would have been on the back numbers of that 263 growth, and I think it would have been a very positive week moving forward for the US economy. Now it's a different situation come Monday afternoon after what was presented by the president. So I think it's just going to be a work in progress, and see where we are by Thursday or Friday. There's every chance you could see a market down 5 or 6% by then. Who knows?
Peter, there's a lovely headline on one of our stories this morning. Goldilocks view of the world faces the return of the trade bear. With that in mind, do we barrel to 245 on the 10-year paper? Are you a buyer of a dip on these treasuries as a backstop?
I think you'd have to be a little bit of a buyer. You know, I think there's going to be a little bit further, you know, strength to the upside for some of those treasuries, and in the short term, they might be a place to, you know, profit from them. While you've got that, you know, the disconnect there, you've got possibly, you know, a weaker dollar in the short term. That's going to force a little bit of pressure to the 10-year, and I think that could be a nice trade.
OK, Peter, thank you so much. That is Peter McGuire, CEO of XM Australia.